Hey everybody, Boris BK Forex. Welcome to the weekly technicals for June 4th to June 8th, 2018. For the majors, for Euro dollar, dollar yen, and pound dollar, a bit of calm, and I think we certainly could use some after a week that saw the Spanish government fall, the Italian government resuscitate itself on a very, very populist agenda, the Trump administration go to war with everybody, and conclude essentially with an insider trading tip on the non-farm payrolls. And after all of that, we sort of settled back into being away from politics to focusing much more on economics. The net takeaway this week was that non-farm payrolls actually were pretty good in the U.S. side. The U.S. economy continues to perform relatively well. European economy steady too. We had a rebound across Europe as far as the data goes, and UK economy showed signs of modest improvement. So apart from all that, when you just strip away the noise of politics, the world continues to function, thank God. And that may be the biggest takeaway as far as the currency market is concerned. The risk aversion flows, the royals, the massive sell-offs that we saw this week could come to an end, and we may see a little bit of bounce across the board. The most interesting question for us going forward is going to be how much strength there is in the dollar itself, especially the dollar yen, and whether the euro can muster a little bit more than just a dead cat bounce that it's been able to do so far. The levels as they stand really haven't changed, because although we had a lot of turmoil, we came back testing support. So we tested the 1500 in the euro, came back, tested the 108 in the yen, came back, tested the 132, 133s in the pound, and came back. And so now we stand ready to see if there's any sort of a bounce going forward. The calendar this week is not as busy as it was last week, but it does have a couple of interesting points on the major side. U.S. really has zero interesting data. We have durable goods, factory orders, nothing really exciting there. On Tuesday, we get the ISM non-manufacturing, which is an anticlimactic report in a way because the non-farm payrolls came out already this week. This was a very unusual month in the sense that the non-farm payrolls were the first major event. They are the biggest event and the first major event of the week because they fall on the first Friday of every month, and this happened to be a time where the first Friday was the first of the month. So all of the ancillary data actually follows the major data. At this point, as I said, it's anticlimactic. We already know the ending, and it's been pretty good. We get a little bit of retail sales out of EC, but what's really going to be on the board of really great interest as far as the majors goes will be the UK PMI services report. The manufacturing bounce back, if the services can bounce back, that would really help the pound in a strong recovery mode. As a matter of fact, the pound is my call of the week trade as we start the week, because I think that, as you'll see on the charts, looks to be most interesting turn trade as we have going forward. Then on Wednesday, trade bounce out of U.S., another very, very quiet day. Thursday, we get GDP data, nothing really important there. And then Friday, no major data, just, the secondary, tertiary data out of Germany. So overall, it's really UK PMI as the primary event risk of the week. On the U.S. side, we're just simply going to see how well yields trade, how well equities trade, where the market really begins to feel. And also, if there's any sort of communication out of the Fed, it seems to be that the Fed now is only going to continue its hawkish rhetoric as the data continues to support its tightening stance. So let's take a look at the charts here. And we'll start with the euro, first of all. So the key thing that jumps out at you is that this is a daily chart, that we had a bullish engulfing, and it held, and it sort of really held. The lows over here ahead of the 15 really got rejected, and we may drift lower here, but it seems to be, at least for the time being, barring any insanity out of Italy, a relatively decent bottom for the near term. How much more do we have to the upside? 18, I think, caps the show, is about as far as we can go, but I don't think that's going to be something we can establish in a I just want to pick up the weekly here. We can establish in a single week. I think 18 may be a couple of weeks ahead of us, and 20, of course, is the major. This is the weekly barrier. Weekly barrier. In the meantime, if you look at the weekly, it's a pretty decent looking hammer. It didn't quite turn green, but it's good enough for government work. And generally, when you have these massive wicks on a weeklies, they tend to be indicative of near-term price action. So you have a reversal candle here, reversal candle here, even a reversal candle here, and there is enough juice here for the flip side. Even here, you have a green candle, but it's a reversal candle. It took a long time to establish directionality, but it never broke the highs. conditionally, that's what I think is going to happen here, in a sense that we may just sort of wallow around here, but it's doubtful we're going to break the lows at this point. So if you're starting to make some swing trade positions, not a bad idea to consider a pop in the euro as a potential pop to the upside. Now, cable to me is the much more interesting trade. So cable, again, very meek little weekly handle on the hammer. Let me see if I can go on the dailies. My chart is awkwardly positioned. So the dailies looks pretty decent here. This is a third, more or less, green day in a row. 34 obviously is a big resist point. I think we can run through that, and perhaps even typically when cable turns, it usually turns much more than people think. I think on a weekly, when we look at the weekly charts here, the real resistance doesn't really come into about 36s. So there's a good 150 points of price action, maybe even 200 points of price action ahead of us. I don't know if it's going to be immediate, if we're going to consolidate a little bit here. The lows in cable are much shorter. There's 32s, so they are only about 150 points away. And as I said, if we can just get any kind of a positive catalyst, it's reasonable for us to think that maybe we can go to 34s. Maybe the market will revive expectations that the Bank of England is going to consider a rate hike sometime this year. And then yen. Yen is the big story of the week here for the dollar bulls. So we did, we had a big, after 6-7 weeks of continuous green movements, we finally had a big reversal here. We held this 108. Remember we said the 108 was going to be crucial. The 108 did hold. Data is pretty good. Now the key question is, can we push higher? That's really going to be the big issue. The 10-year is still at 290. We need to see 10-year at 3 in order for yen to make significant progress. But certainly, I think the bulls have the upper hand here, and yen is not a bad trade. If you are looking for the cross trade, we'll talk about that in the crosses. But obviously, the obvious cross trade that pops out here is the pound yen to the upside, and that performed quite well today as the day went by. So that's pretty much it. I think it's going to be a pound story next week. It's going to be a reversal of risk flow story, and if the data is supportive, we should have a continuation of what happened today. Wish you guys the best luck, the best trading. Boris Schlossberg, over and out.